Hi. Now, deep down, all property investors knew that low interest rates couldn't last forever. Though I must admit, I really enjoyed the strong cash flow the lower interest rates brought with them, for me anyway, over the last couple of years or so. Now, the Reserve Bank warned us that rates had to increase from what they called stimulatory levels as our economy improved. And now, after 5 rate rises since October last year, rates are back to what the RBA calls average levels. So what next? Will interest rates keep rising, and if so, when and by how much? And how will this affect our property markets? Well, the clear message from the RBA in its recent statement of monetary policy is that interest rates are too low for the current underlying strength of our economy. This means that borrowers are likely to be hit by maybe at least 2 more interest rate rises before the end of this year, and we face the prospect of even more rises in 2011. Now, this is because the Reserve Bank forecasts that inflation is going to go up to 3% or so, which is of course the top of its target range. They think that'll happen by about 2012, as soaring commodity prices boost our economy and investment, and this is going to push our economic growth up to 4% by the end of 2012, they predict. Let's face it, this implies that interest rates will need to rise significantly higher. The RBA believes that despite the issues in Europe and the United States, the global economy will still remain strong, and it's clearly more focused on our local inflationary pressures. Now, this has got many economists expecting the cash rate, to reach at least 5% by the end of this year, which means another 2 or 3 rises before the end of this year, and the cash rate will probably reach 6% in 2011. That suggests that the standard variable mortgage rate, the sort of rate you and I are going to be paying, could move to at least 9% over the next 18 months. Now, will rising interest rates stop our property markets from rising? Well, obviously that's what the Reserve Bank hopes they'll do. But it's not as simple as that. Think about it. Last year interest rates fell 6 times and still our property markets faltered. Since last October, interest rates went up 5 times, but property values have kept rising. So there's more than just interest rates, isn't there? Yeah, it's really about supply and demand. And remember, the majority of this comes from owner-occupiers and not from investors. So in early 2008, or in 2008 and early 2009, despite falling interest rates, people put off buying new homes because they were worried about their jobs, about job security, and about the possibility of a recession. Putting it simply, they were lacking confidence. This year, our booming population, which interestingly is increasing by around about 9,800 people each week, and a shortage of supply means that despite rising interest rates, homeowners and investors are feeling confident. They're confident enough to buy a new home or their next investment property. And this is going to continue for some time yet. So what's eventually going to stop this property cycle? Well, in the past, it's either been rising interest rates, which eventually hit a tipping point, or an oversupply of properties because of overzealous development, or a recession and its associated unemployment. With the undersupply of property and the lack of new construction, it's not going to be an oversupply of properties that puts an end to this cycle. And we're unlikely to fall back into a recession over the next few years, so eventually it's going to be interest rates that brings this cycle to a halt. When will it happen? Now, there's too many unknowns to predict this. But looking at the upturn and boom phase of the last 3 Australian property cycles, we're most likely to have another 2 or 3 years to go yet of this cycle. And the best is yet to come. Prices are going to keep moving upwards as long as the number of new dwellings being built lags behind the number of people who want to buy them. Now, I'm not suggesting that prices are going to continue rising at the pace they have. Of course, this is unsustainable. But overall, property values should keep increasing by about 8 or 10% per annum for at least another year or 2 before the boom phase of the cycle. That's right at the end, where property prices shoot through the roof before it all ends. Now, of course, these are just averages, meaning many suburbs are going to outperform these forecasts, and others, particularly those in the lower priced suburbs and first time owner suburbs, those suburbs are going to underperform. So in short, not all property investors will reap the rewards of the next phase of the property cycle, because our rising rates and lowered affordability won't affect everybody equally. You see, while first homeowners who've recently purchased may be feeling some mortgage stress, many established homeowners who've got considerable equity in their homes and investors who bought a while ago, take comfort in the fact that their home or investment keeps increasing in value. And to be honest, most hope this is going to continue happening. Most hope property prices are going to continue rising. Just think about it. The staggering house price boom is dividing our cities into haves and have-nots. Many investors who bought into our markets last year, before prices started their relentless march north, have become very, very wealthy, almost overnight. But for a generation of young people, the great Australian dream looks like remaining as just that, a dream. These hopeful homebuyers are now facing a triple whammy. First of all, there's the burden of higher home prices requiring a high deposit. Then there's the cost of higher rent, making saving for a deposit even harder. And then the challenge of obtaining finance now that their serviceability has been reduced by higher interest rates is the third part of it. Also, our higher interest rate environment will mean that fewer builders will be building the apartments we need to accommodate all these tenants and their tenants of the future. And what does this mean? Rents are going to keep skyrocketing upwards. So the bottom line for investors is to expect interest rate rises to keep going up, maybe a few more percentage points over the next few years. But they should also be comforted by the fact that this is only going to occur because property values are going to keep rising. So to win the game of property investment, you've got to budget for higher interest rates, and you've got to own the right type of property. One that has a level of scarcity that'll mean it'll continuously perform, it'll be in continuous strong demand by both owner-occupiers, because they're the ones who keep pushing property values up, and by tenants, because they're the ones who are going to help you subsidise your mortgage. So you've got to have the right property in the right location, and of course that's one that's outperformed in the long term, outperforms the averages, and you've got to buy at the right time of the property cycle. And in many parts of Australia, that's right now. And lastly, you've got to buy that right property in the right position at the right place and the right time for the right price. The other thing to become a successful investor is you're going to need to surround yourself with a team of independent and unbiased professionals. A team of people who are known, proven and trusted. So it's probably appropriate to remind you that in changing times like we're experiencing, no one can help you quite like the independent property investment strategists at Metropole. Now remember, we've got no properties to sell, but I'm proud that our award-winning team have got access to every property on the market. So if you want to find out a bit more about what's happening in your local market and what our research suggests is in store for us, why don't you join us at a free property briefing in Melbourne, Sydney and Brisbane, or in our associate office with our associates in Perth. Just click on the link below to find a bit more about this and reserve your place. Now also, if you'd like to educate yourself, please read my fully updated third edition, the new fully updated third edition of my best-selling book, How to Grow a Multi-Million-Dollar Property Portfolio in Your Spare Time. I'm really proud because over the last 4 years my book has become a property investment classic, and this new edition is going to give you updated strategies to take advantage of this current new property cycle. So if you click on the link below, you'll get this. Finally, if you want to follow me on Twitter in between these updates, just click on the link below. In the meantime, I look forward to sending you my next property update in 2 weeks' time. Have a great week. Make it a great week. This is Michael Yardney.